All right, everyone, welcome. I'm going to talk about this trade I took. This was a buy. This ran about for like 26 pips. Could have been more, but there's much more to this trade other than just this one 15-minute candle that moved up. So there's a lot more that went into this, and I'm going to talk about that now. So first things first, let's take a look on the 30-minute, and we're going to take a look at the zones that were present, the way price was ranging, the way price was moving, and all that. So now, basically, first of all, what we had a resistance up on top around 2364. We had resistance. Let's let's put it right over here. We had a resistance, and then we also had some sort of a support right at this point. Now, when you have a support like this, you need to see that, okay, if we have a support, we have a rejection down till, okay, excuse me, we have a support and we have a rejection down till, 2357. Can we take a sell? We can only take a sell in this scenario if we have a break below this wick. So if we do break below this wick, we look to the left-hand side to see if we have clean range. Now, if we break below this wick, 2357, the support to the left-hand side is 16 pips away. So there's not enough range, So this support then comes down to this point that if we can break below this support, then we can continue to push down, and this range is like 30 pips. Now, this is a much better range to trade. So a better idea would be for price to break below this area and then move down in this 30 pip range, 38, 40 pip range, and get about, 15, 20 pips out of it. So that's how the analysis was being done. Now, we have to follow price action as it developed. Now, when we look at the candle, let me just zoom in over here a little bit more. Okay. So when we look at the candle, we're still consolidating. This candle basically went up, above this resistance. Now, we also created this support within this, 49.50 pip range. Now, if we break below this support, the next support is 17 pips away. So automatically we disregard this because we're not going to trade in this range because it's like 17, 18 pips. There's no point, minus spread. Now, so when we take a look at this, we're like, okay, now we need some sort of a confirmation. We need a candle to move up to continue to push up, or even a candle to create like a stronger bullish candle above 2364. But that did not happen. Price went down like this. Now, when price went down, you can measure this candle. This was 38, 40 pip candle, and there was no trade at this point. To be honest, there was no confirmation. There was nothing other than the fact that if the next candle can break below this low, this range is like 14, 15 pips, nothing to do, nothing to see. Now, oh, by the way, since we can't take a sell below this support, we may want to bring it down to this support here to the left-hand side. Moving on, looking at the next, you see this candle also came over down. This moved about 24, 25 pips. But since there were rejections here, we didn't know whether this candle will reject the support or whether this candle will continue to push down. We just didn't know. All we know now is that we have created a clean candles here that if we create some sort of support in future, there's a high probability for price to move up because now this is a 62 pip range. You understand? Now we have a 62, 63, 65, whatever. A pretty big range for price to move up. Before this, right? Before this, there was no range. There was support over here. There was support over here. That's it. But now we have clean range. Now let's take a look at the next one. The next candle moved on further down. So if we look at where it went, we can see that this candle went straight down towards this support and we rejected this. Now the question is this support still a valid support based on what price is done over here? And the answer is no, because now we have this clean move created. So this becomes a variable support and we bring it down over here because now we're not looking at price action based on the support here to the left hand side. We're looking at price action based on what we see over here. We see here we have clean range, clean move present at this point. That's all what we see. So now there's only two things can happen. number one thing, candle can close bullish and we can break above the high. Like, the candle can close bullish and the next candle can continue to push up in this 56 pip range, or the next candle can break above this high. This was, by the way, London Open. Break above this high and then continue to push up in this 650 pip range to easily get about 20, 25 pips. Okay, so up till over here, it's important to understand how the candles were forming, how price action was formed at this point. Now, looking at the next candle, you can see the next candle broke above this high and we continue to push up. Now, I was late. I couldn't execute at this point because price moved super fast. We moved up super fast. So when we look at this, when I look at this trade, this was taken right over here in the middle, right? So let's drop down to the 15-minute time frame. Now, dropping down to the 15-minute time frame, this zone now comes up over here because it becomes a new zone. Now, dropping down to the 15-minute time frame, once this candle formed bullish and we had clean range to the left-hand side, I'm thinking that, okay, what's the probability that the next candle can continue to push up provided there's volume in the market, right? So look, it's 11:30, 11:12. This is like after London Open. So we're thinking, okay, what's the probability we can continue to push up? So you can see the entry 2360. And if we take a look at this, this was taken right over here, 2360, for price to continue to push up. Now, the question could be, well, okay, where was the stop loss? The stop loss. Now, in this case, if I'm looking at a stop loss, and also you're actually willing to take a risk in this case. So if we take a look at the stop loss could have been, 43 pips away, right? But your range is 41, so it's 1-to-1. No, stop loss was not like that because we're smart. When the stop is bigger and there's a lot of volume, let's say on the 30-minute time frame, you look at the stop losses on the 15-minute time frame. In this case, when the 15-minute candle has moved 40 pips and you still got about, 36, 39, 40 pips to move, you're forced to look at the smaller time frame. So you can see right here, price moved down. Price moved up at this point, and if you look at the time, this is like 11:45. It's like 3:45. Looking at the 5-minute time frame, this is where you can identify right over here. You can see right over here. This is where, when the entry was taken at this point, the stop was below the previous 5-minute candle, like 20 pips away. So if price did come down, that was the risk that we were willing to take, and for price to continue to push up, if you look at the time at the bottom. So on the 15-minute, it looks clean because 15-minute is a higher time frame than a 5-minute, and market structure is cleaner. But if you look on the 30-minute, it was way more cleaner because now we had a clean range that was formed, So it's very important to understand whenever you have consolidation happening, let's say the consolidation was right over here, and if there are no trades within the consolidation, wait for price to create a clean range. So you can either wait for a support to form for price to fill that range, or you can wait for an impulse entry for price to fill that range. So always wait for clean ranges to form. So we formed a clean range and then we moved up, and then this sell over here didn't really anticipate for price to go down. But yeah, so that was the thought process behind this buy I took, and I think some other members also took the same buy. So hope this helps. And also I hope everyone's having a great Sunday. We'll see you on Monday.